Hello everybody, this is Ken Calhoun from TradeMastery.com with another episode of our Breakout Chart of the Week. We've got 4 charts this week, 3 swing trading charts, and 1 day trading gap chart to feature. As always, all information is for educational use only. I'm not making any advice or recommendations about what to buy, sell, or hold, and by watching this agree not to make actual trades. I was going to mention I was thrilled to be a speaker at the Money Show Las Vegas Traders Expo last weekend. A really big turnout and an outstanding series of presentations from a lot of the different educators there. I also saw 4 other presentations, and they're all outstanding. So many thanks to the Money team for another winning event. Always highly recommend that you get out and go see those when you get a chance. Anyway, let's start off with our list of 4 today. The first one for swing trading is PLSE, the ticker, PLSE. And what I like about this chart is its recent run up after it's broken out of congestion down here in the 25.5 area. Did a sequence of cup pattern breakouts. What's exciting is all this price action the last 2 days or so. You can see it's gone from 25 up to 32. Notice that point range and do the math. You know, the math is a lot more important than the chart patterns. The chart patterns are what get you into trade, but from a risk management and a volatility, whether it's looking at historical volatility or implied volatility for what's coming up ahead, you really want to focus your energy on charts with nice wide multi-point ranges. At least that's what I like to trade, like this one. So PLSE, really nice stair-stepping breakout pattern up here, new highs on the, this is the 15-day, 15-minute candlestick chart. On the daily 90-day candlestick chart, you can see it's broken above all 3 moving average lines and has come back to life nicely with a good high volume breakout in the low 30s here after basing way down at 10. So it's tripled off of its lows and has a really good volatile pattern to follow coming up. Next up is UCO. Crude has been on the increase, on the rise lately, and all the crude oil related ETFs and ETNs like this one have been moving up the last few weeks. This is my favorite one right now, UCO, the ticker. It's got what I call an acceleration ramp. And for those of you who saw me at the Money Show Traders Expo in Vegas last weekend, Saturday, you saw me go over this pattern. It's one of my very favorites because it tells you that you've got institutional volume coming into it as an emerging new theme or a new price action breakout in the chart. So it's still trending upwards here. We'll see if it's able to break north of this 22 whole number, which, as you know, if you've been watching these episodes, we always use whole numbers as support and resistance for box trading ranges. Now, in addition to looking at the volume and the volatility. So we got a good high volume sequence of breakouts. Also, what I like about this guy is it ran from 17.25 up to 22. So it's got a 5-point trading range on a $20 stock. Much better than, say, trading some $2 or $3 stock that doesn't have much range. I like charts that have volume and volatility. So you got both liquidity and price action in your favor the next time you look for a good trade setup. Now, if we go down to the 90-day daily candlestick chart, you can see also a pattern of emerging strength. One thing to be on the lookout for, these, as I mentioned, whenever I see them for you guys so you can learn this, is large green candles at the right side of a bullish cup. Especially good for a recovery play if that candle is accompanied by high volume and has held support off the moving average, broke the next one, and continues on up. And it ran from this breakout at just under 19 all the way to just under 22. What I like about this chart right now is this progression of small, medium, large. I like to call it baby bear, mama bear, papa bear. Or you can call it large, venti, grande for the coffee drinkers in the house. Small, medium, large candles increasing on volume. See this 3 volume bar increase on the 2nd, 3rd, and the 6th? Those increasing volume bars are accompanied by increasing whole real body heights in the candles. So that tells you institutional accumulation's underway. We don't want to fool around with it just yet, but if it does break somewhere over 22, it may be worth a look. So anyway, this is UCO, one of the many crude oil instruments that have been on the rise this last few weeks, and a really good breakout configuration as well. Last but not least, for the swing traders in the house, we have a gap continuation for a cheap chart, Valiant Pharmaceuticals. Valiant Pharma has gone from a closing range of, again, whole numbers. Remarkable how effective a whole number strategy is when you learn how to use it the right way. Whole number closing at 12, it gapped up to just around 14, the center line there. Pulled back off that 15, right? It ran up a little bit, pulled back. Next stop, up in new highs. We'll see if it's able to keep going up. But I like the fact that it gapped up and held the gap. It didn't do a mean reversion or a pullback or a gap fill. And again, as they teach, often when you see a small gap of less than a point or two, often that will continue in trend. And you can see this guy's gone from a low of 11 on the range to a high of 15.5. So we got a good 4-point range on a barely over $10 stock. So pretty good range. It's awake and alive. These are often the start of a nice big continuous uptrend. So whenever you see a minor gap that continues after the gap day and after the gap day twice so far, makes for a good pattern for potential breakout coming up ahead. Again, if I clear off these lines, you'll find that so much of trading success, for my successful years versus unsuccessful times, I found that trading the strongest charts with the best pre-existing uptrends on good volume continuation plays makes sense. So of our three, the Valiant chart's the worst of the three. UCO is probably the best. That's this one. And PLSE is in the middle. So in descending order of which make the most sense for good trade setups. They're all good charts, but UCO is the strongest because of, by virtue of the continuous uptrend with good high volume large candles. In second place, we've got PLSE. We've got a recent momentum breakout with large green high volume candles. And in third place, bringing up the rear, we've got, no surprise, the cheapest chart with a nice reversal of fortune here. It sold down, then it gapped up, and it kept running on up to a 90-day high today as we are recording this. So all good charts to look at. And last but not least, we're going to look at, for our day trading pick of the day, is Roku. And for that one, we want to zoom in on this 2-day, 1-minute candlestick chart. As I'm recording this live at 12:15 East Coast time, in my live room, I called it long at 25.60 before it ran, and it ran up to a full 3 points. This also did, a few things are going on here. It gapped up significantly pre-market from a closing prior day's range of 19 to a current day's opening support level of just around 24. Again, whole numbers are magic, right? 24, again, no surprise, we see resistance just north of 29. Anyway, this is a breakout cup pattern gap continuation play. That's why I called it long for all my members, is because it's a move at a false breakout filter. We didn't want to go in right above the high, because often that's kind of a gap and trap or a gap rollover, and it may move up a little and then collapse. So we were a little more conservative and waited for the move up, and it continued on all the way not only to 27 but 28 and 29 before promptly rolling over and coming back to the midpoint. Again, this is a mean reversion pattern, meaning it ran up, then it came back to the mean or the average. For the fellow stat geeks, that's X bar, right? Or the middle of the trading range. If you turn a bell-shaped curve on the side there, that would be the middle of the range here at 26.5. So anyway, it did a reversion to the mean and it resumed its initial trend. It's like a chop around the rest of the day. So not too interesting from here on out, but this was a good example, a fine example of a gap continuation. My single favorite pattern for day trading and swing trading are gaps that continue in trend. And you can see this ran up from a base of 24 to high of 29 for a 5-point trading range on exceptionally high 3, 4, 500,000 share per minute volume. So really good mover. And these are the type of charts that make sense to day trade, because volume and volatility, both your liquidity and your price action, professional grade, and that's what at least experienced traders like myself like to trade, because it's a lot easier to get 50 cents or a buck out of a chart like this than some junky $3 or $4 low float under $10 stock that only runs 30 or 40 cents. It's much smarter to trade charts like this, like classic day trading style since I've been doing since the late 90s, These kind of charts with multi-point runs with large volume makes for really good trading opportunities. Anyway, I hope that helps. Until next time, this is your humble host, Ken Calhoun, coming at you from Colorado Springs, Colorado, here in the US of A, from TradeMastery.com, wishing you the best for success in your trades. Take care and best wishes. Bye-bye.